Hello, good morning, good afternoon, good evening. My name is Brian Kahn. We're going to be talking about trading the Euro US dollar using Trendlines. We have a pretty large crowd on hand tonight, so as always, please feel free to ask questions, as I think some of your questions, whether they're touching on some ancillary topics such as trading psychology, fundamentals, technicals, maybe even other pairs, will obviously help everybody on. So don't be shy and please participate. You can do that via the function that says questions on your panel there, and I'll be sure that I check in there and answer them accordingly to the order that they come in. So you have my email there. You have dailyforextradingedge.com, the website from IBFX where I post daily market commentary. I posted a few today. And then you have my website which describes my approach to the markets and education as well at jupiterpeakfinancial.com. So let's get right into it. We'll go to the next slide, and I'll just leave this disclaimer up for you for a few seconds. And this next disclaimer, the volatile markets disclaimer, worth talking about. In volatile or fast-moving market conditions, stop and conditional orders become market orders to be filled at the prevailing price, which may be vastly different from the desired price. Stop loss or conditional orders do not always guarantee a fill, and such orders may not be filled as placed. Substantial losses may still occur. So what we're saying here is that anything can happen at any time, and no matter where you put your order in, you're not guaranteed to get filled there per fast-moving market conditions, which is something that we want. We want fast-moving markets because that obviously is opportunity. So my next webinar, which I'll show you at the end when I go into the links for resources and things like that, we'll actually talk about low volatility trading, and that's kind of where we're at right now. So volatility is always a good thing as long as we approach it correctly, but just be aware that there aren't any guarantees out there as far as fills, and market orders can be filled away from where your order actually was placed. Outline of where we're going this evening: fundamental analysis. We'll talk about some macro and micro events. Technical analysis, intermarket relationships. Are they working? What edges are you finding? What relationships are you using to give you those trading edges? Trend lines. We'll discuss how to draw them, how they're used, and then we'll also go ahead and apply them using the Euro USD after we analyze the Euro USD pair. And then again at the end we'll do a quick review, make sure we answer all those questions, and then give you some other links for help. Fundamental analysis, a quick catch-up since we last spoke. Usually I do 2 webinars a month, so this is my only webinar in January. I will have 2 coming up in February. So we haven't been together since before the new year, so about a month ago. So what's going on as far as macro events fundamentally, such as central banks and things like that, interest rates that might be driving the markets? Well, obviously the song remains the same in the equity markets. They're doing very, very well. Song remains the same with central banks helping out and being accommodative. In fact, we get the Federal Reserve, the FOMC, Ben Bernanke, the U.S. Central Bank, to speak on Wednesday, so that's tomorrow. So make sure that you're keying in on that, because maybe something changes in their statement or their approach to interest rates, and that could affect obviously any pair trading against the U.S. dollar. So make sure you're staying on top of the economic data in the calendar. Macro stuff, again, is central bank stuff, interest rate things, International Monetary Fund, governments, things like that. And then the micro data would be the specific economics going around as far as the pair that you're trading. So it might be factory orders, it might be manufacturing data, it might be retail sales, it might be consumer confidence, it might be unemployment data. And if you're looking ahead of the calendar, unemployment data, we're getting a lot of that this week in the United States dollar as far as that calendar goes. How to stay on top of that? Your broker. Your broker provides great analysis, great fundamental picture as far as economic calendars go, collaborators chiming in with their opinions like I am tonight. So Forex Factory is one of those links to those calendars that IBFX does provide, and I'm going to take you there in just a moment. CNBC or some television station obviously is a good idea for breaking news. You also have Bloomberg, which is very popular, and obviously other market sites. But your broker is doing the best job they can to make sure that they're providing you with that information. So really quickly, we can jump out of the slides here, and I can take you over to the economic calendar right here. This is Forex Factory, so IBFX has a link to this. I just have it up already. And again, as I said, it's a pretty busy calendar this week. We get some good manufacturing data in the U.S. We obviously have FOMC. There's the FOMC statement right there. Tomorrow afternoon in the Eastern time for New York. You can see then as we get later into evening, you have New Zealand, their rate statement. So again, that's what you want to be careful, the red flags when they're talking about interest rates, because obviously we really are trading interest rates. Another biggie in the United States, usually around the first Friday of the month, would be the unemployment report. And here you go. As we scroll down, you can see that we're expecting the U.S. to gain about 160,000 jobs. That's the analyst expectations, the big average, if you will. There are some outliers, obviously. In my opinion, it might even print a little bit better. The weekly claims that we've been getting have been good. Fundamental data overall around the U.S. and definitely in other parts of the world has been improving, so it's been buoying the stock market. So things have been getting better out there and justifying, if you will, the stock market going higher and the equity markets going higher. It's also justifying, obviously, volatility going down, and that's affecting trading ranges, which we'll talk about today, which we'll talk about in the next webinar that's kind of devoted to volatility and trading ranges. But there's your fundamental, recap since we've spoken, and kind of what I see now is data for the most part is pretty good. So people are spending, and jobs obviously were increasing a little bit slowly but surely. So just keep your eye on that for a change. But right now, we're seeing improving economic data for sure. So just be aware of that. All right, so that's our fundamental analysis catch-up right there. Moving into technical analysis. Couple key words here: trends, which way is the money flowing; support, where are buyers sitting and lurking; resistance, where are sellers sitting and lurking; and then any relationships that you can put together using other markets to create trading edges. I talk about intermarket relationships all the time, and actually some of these intermarket relationships are somewhat breaking down that we're used to because I think it has to do with a little bit of volatility decaying and equity markets doing so well. But that's good, is to understand that, hey, this may not be working like it used to in the past. I don't have to use it now. I can look for other things. It may come back in the future. But knowing that something isn't working is just as good as using something that's working. So that's what you just want to be aware of, is this working what I used to use in the past? And if not, then I can stop doing it and I can look for something else or use some other indicator, some other market, whatever it may be. So those few things I think are worth keying in on, and always keeping them in the back of your mind when you're building a trading plan. Trend, support, resistance, and then any other thing that you can bring in, any other market that you can bring in to help you with the actual market that you're trading. I've talked a lot about in the past equity markets moving one way, the US dollar moving another way, and actually my post on Daily Forex Trading Edge today talks about the Euro US dollar pair, the pair that we're going to be talking about tonight, and its up move and its relationship to the equity move. So I did a post this morning before the equity markets opened up. Then the equity markets had a good day. I talked about the relationship between the up move in the equity markets and the up move in the euro against the US dollar today. So those are two articles for you to seek out on dailyforextradingedge.com. So trend lines, let's talk about them. How do we draw them? All right, and how do we think about them? I like to think about them just like the two words that we talked about, support and resistance. Trend lines are no different. If I draw a horizontal trend line or if I draw a diagonal trend line, it's going to act as support or resistance. That's what I'm using it for. I believe that it's going to hold this level, and if it doesn't, I'm going to take my loss. If it does, then I'm going to manage my winner and move my stops accordingly and manage, because things can change at any time. We talked about that volatility disclaimer. We talk about fundamentals, interest rate announcements, governments making decisions and things like that, economic data. Things can change on a dime, and there aren't any guarantees. So just because you might have a winner moving your way doesn't mean that it can't turn into a loser. So management of the trade. But again, it all starts because I believe that I see a resistance or a support line just using that that trend line, and we'll draw those. So they can be horizontal straight across. They can be diagonal sloping up for support. They can be diagonal sloping down for resistance. A lot of you have probably heard old resistance becomes new support, or old support becomes new resistance. So those are good ways to use your trend line where you see them bisecting certain price areas. You can also do what's called railroad tracks or parallel trend lines. I'll try and find one or draw one tonight, where you have two sets of trend lines paralleling each other, and they're acting as support and resistance as the price bounces in between. Also remember, when you're drawing them, many points. The more points it touches, the more validity that trend line has, the more people I think are keeping an eye on it as far as how many traders are looking at it. Then again, length of time. The longer it is, it's in force. Just because it's a longer time frame and it's been there for months and months and months and months doesn't mean that a short-term trader can't use it. But again, validity. It has more validity to it the longer that it's been in place, the more times it's been touched. So, long might be it touching a few bars or over 5 or 10 minute period for an intraday trader. But when I say length of time, we do tend to see trend lines that can be enforced for 3 months, 6 months, 9 months, a year. And again, that's a pretty big trend line, and even a short-term trader would want to be aware of that longer-term trend line, because that can really change, obviously, the bias for a lot of the bigger traders out there, maybe the institutional money out there. So I'm just seeing if there are any questions that are coming in yet, because again, we have a large crowd on tonight, so make sure that you're going ahead and asking those questions. You've got to go ahead and type them in to that question function. It's not good enough just to raise your hand. You've got to actually go in and type in your questions. So just make sure that you're typing them in, and then they'll be able to come up, and I'll be able to see those questions come up. All right. So we talked a little bit about how to apply and how to draw them and what we're looking for as far as trend lines, and again, how to think about them. Keep it simple. Support and resistance. That's what we're looking. We're looking to see where we think it's oversold and where we think buyers are going to come in and it's going to bounce and go up. We're looking to see where it's overbought, and we're looking for where sellers are going to come in and we think it's going to roll over and go down. So that's a little bit of information. Again, this will be recorded, so you can always go back to this page to refer to my kind of important facts about trend lines. So next slide, moving into the Euro USD analysis. Let's draw some horizontal trend lines. Let's draw some diagonal lines. Let's create some trading plans using those trend lines. All right, so we're going to switch the screen here, and we're going to move into the IBFX, the MetaTrader 4 platform. And I've already got the US dollar euro, or the Euro US dollar pulled up here, and you see some trend lines on there already. And I've talked about, doesn't matter if you're a short-term trader, because a lot of you are intraday traders and shorter-term time frame traders, but I think it's still important for you to be aware of the longer-term trends. And again, this is this stuff that I'm talking about every day in my market commentary, and these webinars are just kind of a synopsis of what I write every day, 2-3 week catch-ups as I do these. So make sure that you're reading those commentaries so that you're aware of this, because I post these charts, I put these trend lines on there. So first and foremost, we have a pretty bullish Euro US dollar as of late. So let's go ahead and pull that up right here so that you can see we are now on a daily time frame, and I'll put my crosshairs on here so you can see. So if you're not using trend lines and drawing them, everything is right click. So I'm going to right click in here and I go to my objects list, and I can go ahead and I can delete my trend lines. I will go ahead and delete this one, and then I also have horizontal lines. So you can draw trend lines horizontally, but you can also pick the horizontal line so that you can go ahead and draw it quickly. So here's your horizontal line. I just hold my cursor there, and it brings up that little blurb so I know what it is. There's my trend line. Some of you know that I also like to use Fibonacci's for my market commentary. There's my Fibonacci retracement. So again, I'm interested in drawing a trend line, and I've known about this for quite a while, this support line. So here we have a misdrawn trend line, so I'm going to go ahead and delete that. I just got a new computer, and so it's still touchy as far as the mouse pad when I'm using it. There we go. So something like this, just to see where your support line is, something like that. So in the past, we've seen that the euro US dollar on a longer term time frame, again this is daily, so every bar here is daily, is starting to use that as support, and it's well off it now, you know, really, really far off it. So you have to, if you're going to use it again, you know that there might be some other trading opportunity that might come along, whether it's resistance, whether it's head and shoulders, whether it's a Fibonacci, something else, whether it's a moving average, because it's got to drop significantly to get back to that trend line. And again, just because it gets to a trend line that has been used as support in the past doesn't mean that you're going to take that trade right then and there. You're going to have to say, what fundamentally caused the euro to go from 1.35, where it is right now, 1.34, 33, 32, down towards 1.31, and say, hey, am I still bullish here? Do I like it? It used to be at 1.35. Now it's at 1.31. Why is it here, and do I like it down here? So just kind of keep in mind that you always have to ask yourself, why are we here, and do I like it here? It's not good enough to just to say, oh, there's a trend line, a moving average, a Fibonacci level, whatever it is, I'm going to trade it. You have to take fundamentals, other markets, other announcements, and things like that into consideration. So that's the longer term time frame. As of late, if we want to go shorter term, you can see that just over the past few months, November, December, January, you can see that we kind of have some resistance up in this area. So that's what I mean by the parallel trend lines. We're acting as support down at the bottom, resistance, we come back down, support, resistance, came back down, and now again we're sitting right at resistance. Is this enough of a story for you to say it's 1.35? Maybe there's some resistance back here, okay, on the left side. It's hitting this trend line. Is that enough of a story for you to say, I'm bearish here? If there's going to be that intermarket relationship and equity markets are overbought and they roll down, does that mean that the euro will weaken against the US dollar and that this is a good area to get in? We don't know, but when we start to talk about creating trading plans and applying them, if I move this down to a 4-hour chart and then even to a 1-hour chart, you can see it right up against here, where you can see, hey, if I want it to be resistance, I don't know if it's going to be resistance, but if I want it to act as resistance, I'm not going to put my stop too far above that line. So this line comes in around 35.20, 35.30, 35.40. We're around 35 even right now. I'm not going to let it go too far above there for me to say things are wrong, because if it gets above there, a lot of people know about that trend line, and then they might say, hey, anybody who's short is now wrong and they've got to buy it back. New longs might come in. New longs come in, that pushes the price up, and it can go up pretty quickly. So if you use a trend line to act as resistance in this case, you put your stop fairly close to it. So maybe you put your stop in at 35.50. That's about 50 pips away. If you're risking 50 pips, maybe you're trying to make 75 pips, 85 pips, 100 pips. Risk 50 to make 100, risk 1 to make 2, and that's pretty legitimate. That's pretty realistic. You don't need to risk 50 pips to make 800 pips. Make sure that you're making it realistic for what the pair is telling you. And if it came down 35 even, down to 34.50, down to 34, right down here, hey, that's pretty good. That's 1 penny, 100 pips. That's pretty legitimate. It's great if it goes lower, but it's been a bullish trend, and you're going against the trend here a little bit. And unless you have a fundamental, technical, big, game-changing decision as to stay short, you might be happy taking 35, 45, 55, 65, 75 pips when you're risking 20, 30, or 40 pips. So that's how you build in that trading plan. All right. Again, it's the same thing down here. If I'm a short-term trader and I'm only trading for the next 20 or 30 minutes, I might only be willing to risk 20 pips to make 30 or 40. Versus the day trader who's trading this, who has a little bit more capital maybe, they might say I'm willing to risk 100 or 150 pips down here to make 200 or 300 pips, because that's what it's been doing. Again, use the charts. It bounces off support at 27 even, and it goes up to resistance at 31 even. It goes up 3 or 4 pennies. Same thing, it comes down to 28.70, and it goes back up to 33 even. Comes down to 29.70, and it goes up to 34 even, 35 even. So let the charts tell you what's realistic. That's really what I'm going to hammer on in the webinar in 2 weeks, is making sure that you're realistic given what the trading ranges are doing. So that's a good idea kind of what the euro US dollar has been doing. It's been doing very well. If we go to a longer term chart, this is the weekly, just so we can get some other points. We have some resistance up here right where we're at, 35 even. We've been here in the past and we've been rejected. If it gets above 35 even, this is why you don't want to let losers run, because because maybe it starts to fill this big area up here, 36, 37, 38, 39. Who knows how high it can actually go, all right? So if you're using a trend line, whether it's horizontal or diagonal, whether it's support or resistance, that's your theory. You want it to hold that level and bounce up or down. If it goes against you, it's just a mechanical process to say, I'm wrong, I thought it was going to hold that level, it breached that level, I get out, and you move on to the next opportunity. And having a loser is okay, because you say, okay, I learned something. Now it broke support, now it broke resistance. Now I kind of take the other side and say, okay, now I'm somewhat bullish, now I'm somewhat bearish because it broke that level and it's showing strength or it's showing weakness depending on which way it's going. All right, so that's how you want to think about it, is it's a mechanical operation. Instead of just looking at a support line where you're not drawing a trend line and just saying, hey, there's support here, they're buying a resistance, you're just using the trend line to confirm and kind of give you some guidance, and it's a nice red line that I have here, and it sticks out for me. That's why I put it in red, and if it violates that level, I know that that red line is violated, it went against me, and I'm happy to get out with a reasonable loss, okay? And again, I haven't seen any questions come by, I don't think yet, so if you have some, I see hands going up and being raised, but again, you've just got to type them into the function, and I should be able to see them come across. All right, so that's the Euro US dollar kind of on the longer term time frame. We know that it's bullish. We know it's kind of elevated, but again, just because it's elevated doesn't mean it can go higher. So around this 35 even, what's going to happen, I'm not really sure. That's the longer term time frame. Now for the shorter term time frame, and again, this is kind of what I talked about today as far as the equity markets moving up and the Euro US dollar moving up today. We had a pretty bullish move today, so bullish in such a short time frame. This is only a 15-minute chart. That's hard to draw any significant trend lines on it. Again, we have the trend line up here that we're running into resistance right here around 35. So if you look at it on this 15-minute chart, look at what's happening at that resistance level when it gets to right below 35 even. Okay, 34.94, it bounces back down, comes back up, 34.94, bounces back down, comes back up, 34.94, back down. And so it's right there again. And so again, if you're looking at it, it is acting as resistance. Is someone willing to go ahead and trade it right now? Now remember what time it is. In New York, it's pretty late in the evening. New York traders are sleeping. European markets aren't open yet. So it's the euro versus the US dollar, two markets that are pretty much sleeping. The euro isn't going to start to trade their bank hours for a few more hours. So right now the Asian markets are open, and then Europe will open next. So the banking centers aren't open. So if you're going to trade this right now, because lots of you like to trade this time frame, the Asian time frame, if you're trading a European entity versus a U.S. entity during the Asian time frame, look at their trading range. Is that a big trading range or a small trading range? It seems for the last few hours it's been going 34.84 to 34.94, 34.84, 34.94, 10 pips up and down. With commissions, you need to be careful and make sure that you're trading exactly where you think that you can get in at the top or the bottom of that range. So if you're looking to get short, you're basically probably getting short right here at this price. And if it's a 10 pip range, how many pips do you want to risk to make 10 pips? Do you want to risk 20 pips to make 10 pips? Do you want to risk 50 pips to make 10 pips? Do you want to risk 8 pips to make 10, 5 pips to make 10? So if you're getting short here, you know that you probably only have 6, 7, 8 pips realistically based on this trading range here that you can get out of it. So you're probably risking 5 or 6 pips. If it goes up above towards the 35 mark, you're out. And if it rolls down 34.90-ish, 89, 88, that's where you're starting to buy it back. Because again, during this time, that spread might be a little bit wider because obviously there's less interaction now than there was during the European banking hours and the European close and the American Open, which is right in this sweet spot right here. That's the busiest time frame. And again, take into account what volatility is doing. It's not as active as it's been. And if you're a trader and you're not paying attention to volatility, it's a pretty good idea that you can do it. This is the partner website over here at IBFX, and if you type in VIX, I have to do the symbol lookup here. We can do the index, and So it's usually, there's a dollar sign next to it. We can do the VIX V, which is a 3-month. And let me bring it out to a daily, just so you can see what it's doing. This is the volatility gauge on a daily chart, and you can see what's the trend of this. Doesn't take much to see that. If we do a drawing, and again, here's a trend line, and you just can do something like that. Again, that's just a downward slope of which way the trend is going. You did have support going across here, so if I draw another trend line, okay, you can kind of get the idea if you use some chart patterns, maybe a descending triangle type thing. So there was support for quite a while, and then as the equity markets went surging higher and higher and higher, this broke down and volatility went lower and lower and lower. So volatility has to do with trading opportunities and trading ranges. So that's pretty important to see that volatility is going down. So that's why I want you to be aware of what trading ranges are doing. Okay. All right. So getting back into the euro US dollar, and we can kind of get ready to wrap up there. You guys have something to think about. 35 even, that's a round number. That's a psychological number anytime you get to a 00 or a 0.50, a half penny. So what's going to happen there? Equity markets have been surging. It'd be definitely nothing wrong with the equity markets taking a break and rolling over. And if there's a relationship, does that mean that the euro is going to get weaker against the US dollar? Because there has been that rough relationship at times. So it'll be interesting. Maybe a longer term trader is getting short here at 35. 1.35 and putting their stop in at 1.36 or 1.3650 and risking 100, 150 pips because they think that the euro has 150, 200, 250 pips to drop. The same spot, a day trader might be getting short here at 1.35, putting a stop in at 1.3515 and trying to get out at 1.3470, risking 15 pips to maybe make 30 pips. But they're using the same thing. They might be using some of the same psychology, some of the same fundamentals, some of the same technicals, but they're just in it for different periods because they have different account sizes, they have different risk tolerances, they might not be able to stay in front of the computer as long, whatever it may be. Generally, if you're trading for shorter term time frame, you might have some larger contracts on because you're getting out at a smaller amount of loss as far as the pips go, but you also tend to trade and you don't leave the computer for that trading time frame. I don't think it's wise to go ahead and trade for 15 or 20 pips risk and 30 pips of gain and just leave it to chance and leave the computer. You're managing it the whole way because if you risk 15 pips to make 30 pips and you make 25 pips, hey, that's good enough maybe in this not volatile environment right now. And you might say, hey, I was going for 30, I got 25. Good job, take it off, pat yourself on the back, on to the next opportunity. So definitely the shorter term trader is managing that trade the entire time. It just depends on what your goals are, what you're looking for, what some of your reasons are for staying in that trade for a longer period of time frame. So definitely an upsloping trend in the euro, definitely at an area where there's been some resistance short term, been some resistance quite a while ago, as you see on the daily chart, right in that area on the left side of the chart. So we will see what happens here. Again, I think if the equity markets have a good day, a really strong day again tomorrow or the next day, you might have the chance to see the euro pop up above this line. If equity markets roll over, you might see it go down a little bit. But again, look at what the trend's been doing. If it comes back down, it might find a support level right here, and here's your horizontal support line. Recently, don't worry about this support line down here, the red trend line, because you've got this to worry about right here first, okay? So there's your support trend line right there, right along there, right around 32.50. So if we roll down there, someone who's short is pretty happy, and maybe they say, hey, we're approaching support. This is a good place to get out. And maybe they reverse and they say, I had a nice trade. Now I'm looking to get long again because the trend's up, and I think that it's going to find support here at the old support level. So that's what your eyes are trying to key in on, is this definitely was a good area of support, and we bounced off of it. If we get back there, why are we back there, and what's going to happen at those levels? So hopefully you enjoyed me putting on a bunch of trend lines there, horizontal and diagonal, on the euro US dollar. So we drew horizontal lines, we drew diagonal lines, and we definitely created a few different trading plans on different time frames. Review fundamental events. I can't stress the importance of staying on top of those. The next big one would be the FOMC, the U.S. Federal Reserve, on Wednesday, tomorrow. Technical analysis, trend, support, resistance, and then using trend lines to see where you think the buyers and sellers are, the support and resistance lines. We talked about trend lines, how and why they're used, the importance of them, how to look at them as support and resistance, and then applying them to one of our major pairs out there, the euro US dollar. Questions and resources. I didn't see any. Again, I saw a lot of hands pop up here, but I haven't seen any questions come across. So I'm, again, with my new computer, the first time on this software, I'm not sure if it's reading everything. So I will check in if you did ask questions. I apologize, but you know how to get a hold of me. I'll be doing a webinar in 2 weeks on February 13th. We'll be talking about volatility and what it means for traders. You have my email, so you can reach out and ask your questions that way. You can get a hold of me and the other great collaborators for IBFX on their education site. I post articles every day at dailyforextradingedge.com. These videos will be recorded. There's about 2 dozen, maybe almost 3 dozen by now, on the IBFX YouTube page. So if you go to YouTube and just search the IBFX page, you'll find me in there. And then, again, you can find me through various ways in IBFX. And then my website, where, again, you can get a hold of me very easily at jupiterpeakfinancial.com. So thank you very, very much. Let's see if there are any questions coming in here. Looks like I have one coming in here that finally popped up. All went well. Thanks for the information. Do you use the Fibonacci tools much? And I actually, you may have come on late, but I described that here. I'll pop back into it right here as I switch the screen. As I go back into the MetaTrader 4, yeah, right here is the Fibonacci's, and if you've read any of my market commentary, Mike, or you've seen my commentary on my website or on Daily Forex Trading Edge, I can't really get up and even tie my shoes without thinking about Fibonacci's. I've done a number of different webinars on Fibonacci's. I think they're a very strong tool to use. They're not the holy grail by any means. They're not a guaranteed winner by any means, because there just aren't that, that doesn't exist. But I think that in conjunction with other tools such as moving averages, trend lines, fundamental analysis, I think that Fibonacci's are very, very strong. The way I view Fibonacci's is to say, where are we now compared to where were we? So are we overbought compared to where we were? Are we oversold compared to where we were? And Fibonacci's guide me to see how much we've moved. So I love to use Fibonacci's to say how much we've come up. If you want to see the region of Fibonacci that I have on the euro, you can see it on the bigger time frame. And it's tough to draw the Fibonacci here because it was such a kind of a sloppy top here. But I try and find where it really got going and where it stopped. So the move to the downside, I think, really got going right here. And you can see that we're coming up into that 61.8 area, kind of near resistance. Equity markets have been surging. So I'm very, very, very curious to see what we're going to do right in this area, right around the 1.37-ish area, if we do get there, but somewhere in there to see. Because again, I want to look at what we've done. Look at this move. Just in the past couple weeks, we've gone, in the past couple months, we've gone from down here pretty low into the 1.27 to 1.35, so almost 10 pennies. So by the time we get up here, that's what I want to know, is what's going on fundamentally in other markets, what's going on fundamentally and technically as far as central banks and news out there, and maybe there's enough of a reason to say, okay, has it come far enough? What reasons do I have fundamentally and obviously technically out of the Fibonacci? So I like to use them because they just give me guidance to show me where I am now retracing compared to where I was. We had a huge move down, and now the equity markets have gone up, and so have the euro, but it's gone up, a pretty big move. The bigger move was down here at like 1.21 all the way up to 1.35, so a massive, massive move up. So the longer-term trader and the shorter-term trader are probably looking at the same thing to maybe go reverse and go short the markets, but again, they might just be using a different amount of risk versus reward, because one might be in it for hundreds and hundreds of pips, the other one might be in it for 10 or 15 pip chunks, as they see an area where they think that now it's getting overbought and they can short it down there. So again, I'm not saying by any means this trend up is over, because just because the markets are elevated or high doesn't mean that they're overbought. So just keep that in mind. So very good question. That's why I said it's great to have you guys ask questions, because it leads to other things. I'm always happy to touch on some ancillary topics like that. Okay. So let's wrap up here, and let me just go back to those links so that you have them, so that you know they get a hold of me. So if I didn't get to all of your questions tonight, because again, we had a huge crowd, so thank you for your attendance tonight. This should be on the IBFX YouTube page in a few days, and you can get a hold of me if you have any questions, and please read that daily market commentary that shows up at these two sites, Daily Forex Trading Edge and Jupiter Peak Financial. So good afternoon, good morning, good afternoon, good evening, wherever you are. Have a great trading day, and I will talk to you very, very shortly. Thank you.